The defense attorney for a traditional carrier is actually representing the carrier, not so much the employer. And a self-insured group, when it's litigated, the attorneys are working for the employer.
Welcome to the Self-Insurance Podcast, brought to you by CRMBC. Every week, we're interviewing industry experts, restaurant operators, and brokers to talk about the world of workers' comp self-insurance in California. Today, we're joined by Michael McDonough. He is the broker principal of McDonough Insurance Services. Welcome, Mike.
Good morning, Ken.
Mike is also the author, you can see it in his background, of The Employer's Guide to Workers' Compensation. And he's been in workers' compensation for how many years now?
In workers' comp, I've been practicing for about 30 years.
30 years. That's a long time in workers' compensation. You must really love it.
It's my bread and butter, and I have a lot of passion behind it because, employers and employees need our kind of support. So I enjoy what I do every day. So thank you.
And there's few people, obviously, I've been around workers' comp for about 23 years now, as I've been practicing law, now CEO of CRMBC. But in the industry and all the people that I've worked with, there's few people that I have come across that are making as big of an impact with their clients in workers' comp as you are, including writing the book, and it's filled with how many tips for members?
I included 70. There's many, many more. It's just those are the ones that I see on a regular basis that can make an impact, either positive or negative, depending on how that is used. So it's important to both brokers and the employers.
And you look at it as a way to make your business more profitable, because often the employer isn't looking at workers' comp. They're looking at all of the other noisier things in their business, and they don't look at their workers' comp until it becomes an issue, right?
Right. And as a ex-restaurant owner and chef, I was looking at everything from top to bottom, from my paper goods to my alcohol to my, poultry, to my meats, my, produce, payroll, everything, right? And even, workers' comp should be on that as well, because to me, it's like if you're not watching your workers' comp costs, why isn't that just as important as your payroll and everything else and your food costs? So it's really important that workers' comp be part of the, as far as the equation, and where employers can really drive costs down by taking control of their workers' comp, which can help them in the long run.
So in other words, you really get it. So when we talk about what we're talking about today is the hardening market, but you really get it from the broker standpoint, from the restaurant owner standpoint, and even from the carrier standpoint. So first, talk to me, when you say hardening market, what does that mean?
It just means that the availability of accessing carriers and pricing is going to be limited, and it's going to drive up the cost for, most employers. And so you want to prepare for it. And if you prepare for it, then you can, absorb some of that, and it's not as impactful as far as if you are blindsided by a hard market. If you prepare for it, you're in a better position.
Meaning, so when you say the availability, so it's that costs are going to go up and there's going to be less options available.
That's correct. So right now, I would say most insurance carriers, traditional carriers, it's been a soft market, meaning very competitive rates for a long period of time. I think this is one of the longest spans that I've seen in my career. And so what happens is, as the insurance companies start incurring more costs, what happens is the smaller carriers that don't have the backing and the finances and so forth, and depending on their loss ratios, they may pull out of the market for a period of time. Other carriers are going to have substantial rate increases, which is going to be unaffordable for many employers. So it's really about, getting prepared and understanding where you are now, depending on your loss ratios, your losses, your claims management, your reserves, what your experience modification is. And so there's a lot of things that go into this, because when the market does hit, those with high mods now and high rates, their rates are just going to skyrocket even more. And then what's their alternative? So that's really what we want to do, is get the message out to employers that you want to start looking. Don't wait until then. Be proactive. Be as proactive as you can. Contact your broker and say, hey, if a hard market hit in the next 6 months, what is my position? What do we need to do now to mitigate my loss?
Speaking of which, I know you know this because you've been around with CRMBC since the beginning, but a lot of people might not realize that the reason that a bunch of McDonald's and Burger King guys got together and formed CRMBC was because it was a hard market and several of the carriers had pulled out of the market. And they said they just aren't going to keep giving their money to traditional carriers, and they wanted to really control their own destiny. And you are a huge proponent of self-insurance. Will you talk to us a little bit about the differences between how a self-insured group like ours is managed compared to a traditional carrier?
Sure, I'd be happy to. Self-insurance is exactly what it means. You're self-insured. So you are taking on the risk and you have control versus a standard carrier. It's a guaranteed basis. And, they come up with a premium. You pay the premiums. If you have claims, they pay the claims. The biggest difference is when you have claims, there is very little input between the employer and the insurance carrier versus a self-insured group, which is a much smaller group. And as far as the claims go, the employer has a lot more leverage, so they can get involved. They can, for example, select their defense panel. They could attend the deposition. And not that you can't attend depositions with a standard carrier, but it's just that when you're with a small group of like-minded individuals that are safety-minded, first-class safety practices, you're controlling your risk, you're controlling your costs and so forth, you have a lot more control in the self-insured group than with the traditional insurance carriers who basically manage all the costs. They are the ones that do all the selecting of the third-party vendors, the defense counsels and so forth. So in a self-insured group versus a standard carrier, you have, especially on a litigated claim, the defense attorney for a traditional carrier is actually representing the carrier, not so much the employer. And a self-insured group, when it's litigated, the attorneys are working for the employer. And that's the biggest difference, is that the attorneys are working for the employer versus the insurance carrier.
And the bottom line of how that directly can impact a member is that in a traditional carrier, they might settle a claim without any input from you. And you might know that there's some fraud or there's some extenuating circumstances, but you didn't have say, and you don't find out about it till years later when your rate goes up, right?
That's very common, Kaya. And you bring up a good point. And I don't know how many employers know this, but there's the employer's Bill of Rights. And in those Bill of Rights, it basically says any financial decision made by the insurance carrier that can affect an employer financially has to be shared with them. That's reserves, that's paying out claims and all those things. And I can say it probably 99 out of 100, the employers that don't know their rights under workers' comp, they're finding out after the fact. And so they'll get their loss runs in their, let's say they're shopping their insurance for 1 year. And the new broker they're talking to looks at the loss runs and says, hey, what's this $100,000 claim here? And the employer says, what do you mean $100,000 claim? That was just a minor injury, whatever, how to get to 100,000. Sometimes that's how they find out. They never even knew. And so, yeah, there's a lot more transparency and there's a better communication, in my opinion, with self-insurance than there is traditional insurance.
So you have a lot of different clients. Some choose to go to traditional carriers and some choose to self-insure. What are the criteria that an employer has to have to really be a good candidate for a self-insured group?
Well, first of all, they have to take accountability for their injuries. They want to be involved. And if you're self-insured, you're self-employed. So if you want to control your costs as far as running your own business, well, you also want to control your own workers' comp. And so the criteria is that you join a self-insured group to save money. It's a long-term play. People get into the stock market and mutual funds. If you don't get a return in a month or 6 months, you jump out. That's not why you go into, the stock market and mutual funds. Same thing with self-insurance. The longer you stay in self-insurance, you're going to ride it out because there's more consistency in the rates. So with the traditional market, depending on the shareholders, the expenses, the return on investments and so forth, that dictates a lot of their pricing. So when they are, moving the needle around, there's a lot of uncertainty for employers. So with a self-insured group, the rates are predicated based upon the losses of the members, but also as a group. So the rates are more consistent because based upon our actuarial studies and knowing the cost of our excess coverage and things like that, we have a better understanding of where our rates can be. So we're never competing with the standard market or with the other employers. We're just strictly working with the pricing based upon the performance of each of our members.
What do you say to members? And it's usually, when I say that what I'm about to say, it's usually coming from their brokers that don't understand self-insurance, or that don't want to, that are making more money at a certain carrier who's paying a bigger commission. What do you say to members or potential members who are being told it's just too risky?
Well, I think that they should make the decision based upon um, their understanding. Obviously, brokers, when they feel threatened that they may lose an account because the client wants to switch, that's just part of the business that we're in. But at the end of the day, if you want to do what's best for your client, then it's really hard when the employer is understanding the program more than the broker, but then they want to get that kind of support and confirmation from the broker that, hey, I'm making the right decision. And if the broker doesn't understand self-insurance or the benefits of self-insurance because of fear, and they don't want to commit to something that they don't understand, they're obviously going to just say that, well, hey, it's risky. It's too risky. Don't do that. And in reality, they could be costing their client a lot of money and really putting them in a situation where if they start having claims, their experience mode goes up, things like that. So it's really best that a broker understands self-insurance, the employer understand self-insurance, but more importantly, when you go into a self-insured group, it should be the employer's decision, not the broker's. And that's true with the traditional market as well. Business owners should have enough transparency and knowledge and education to make the best decisions for their business, and that it's not up to their broker. As a broker, I'm here to guide. So I'm here to provide knowledge. And based upon that knowledge, my clients are able to make decisions. Now, obviously, if it's something that's, really strange or off cuff, obviously I'm going to steer them back to where they need to be and make sure they understand, what the decisions are. But for the most part, our job is to make their lives easier, to control their costs, reduce their risk, and give them the best program to win in business. And it's, to me, I think you have to offer both. And it's up to the employer to make the decision whether they feel it's best for them or they want to stay in the traditional market.
Mike, you've been placing your members into self-insured groups for 22 years. What is the top benefit that you see for a restaurant owner to join a self-insured group?
The freedom of having control and a voice. I've worked very closely with my clients that are in the self-insured group, and they love every aspect of it. They love the camaraderie. They like knowing that they're close to the board, that if there's something they don't like, it's more intimate. They could, like right now, you're the CEO, they can call you and you will make sure they get their questions in. They can go directly to the claims people. They're able to communicate with the administrators. So it's a real team effort. And it's not just all these transactional compartments or departments of large carriers like the auditing or the billing and this and that. No, you know who you're working with. And so once a restaurant owner understands that the group is there to support them and help them win, they just, but the most important thing I would say is that the control. And I haven't had any of my restaurant owners, once they came into the group and they were able to see the results that they were getting, but also the consistent rates over the last 15 years, even though the market's up and down, whatever, they are still dollars ahead of everybody else by staying consistent in this program.
So this is music to my ears. In closing, though, let's go back to the hardening market. What is your closing advice to restaurant owners right now about how they can protect themselves and get the best outcome possible in this hardening market?
Well, it's going to start with their claims, Kaya, because if those aren't in order, that's really, I would say, the driver of the bus. And what I mean by that is if you're experiencing either frequency or severity of claims, your mod is, above, 100, there's a lot of improvement right there. But even if you're above 200, then that's really, you're really in a danger zone. So if you're looking at somebody's blood pressure as an example, Anything over, 140 over 80 these days, they considered high. Well, I'd look at my workers' comp the same way. I would look at my loss runs. I would see what claims can be closed. I would start looking and going to my workers' comp or my insurance advisor saying, hey, the market's going to be changing. Carriers are going to be stopped writing. Rates are going to be going up, especially people with experience modifications like myself. What is the best way to protect myself? And what are all the options available to me? Is it a high deductible plan? Is it a self-insured plan? What is the best option for me and my restaurant right now? And that's really the conversation that you need to be having with your advisor, and then having them find the best solution and getting you prepared for what's coming, because we don't know if it's 6 months. Because, Kay, I got an email today, and 4 of the top carriers, one is offering 25% commission through July. Another one's, and the other 3 are still offering 20%. So it's not really about the broker's commission. It's really about the client winning. And so, a client shouldn't be overpaying for fees. Just like they're going to hire an independent consultant, you want to find the best consultant and pay the most, you want to pay competitive rates, the going rate. But, you're paying 20%. Is your advisor earning that 20%? So even though we pay less commission, you have to look at the services that we provide. I can say as a broker, my level of services have diminished by being part of the CRMBC over the last 22 years. And my staff likes it as well, because the team, the administrator, the third-party claims administrator, everybody, the board, everybody is involved. And so what that does, that reduces the amount of time and effort that we have to put into it. So, and the fact that safety is included and all the other things that are included with the self-insured program, we don't have to spend any additional money. So a 10% commission, we're still making a good profit on that. But the most important thing is that our members, our clients are winning, and that's the most important thing. And our retention with those members is 100%. So if there's anything you want to do right now, I would really look into self-insurance.
Thank you, Mike. This is all the time we have today. Thanks so much for joining me. And I look forward to having you back on for another podcast, because you have about 70 other tips for members of that, how they can reduce their costs in work comp.
Well, I appreciate it, Kay, and I'm available anytime, and I always enjoy talking to you. So thank you so much.
Thanks, Mike. Bye-bye. Thank you for joining us for the Self-Insurance Podcast, brought to you by CRMBC. If there's a topic you'd like to learn more about, or if you have any questions, just email us at info@crmbc.com. Remember to subscribe, like, comment, and share, and join us again for more tips on self-insurance.